Investors and traders, welcome to the channel Market Chart Pattern. Today is 15th of October 2023 and I hope everyone is having a great weekend. In this video segment, we are going to take a look at the key US stock indices and we will also take a look at the debt markets, which we will do through the eyes of the US Treasury bond futures and also the 10-year note futures. This video is for educational purposes only and it is not a financial advice. Before we begin to take a look at the US stock indices, let's take a look at the bond markets. So this is the daily chart of the US 30-year bond futures. It is also known as the long bond future because it's 30-year duration. It's very long duration. So I'm going to move to the 1 week chart. So this is the weekly chart. Here last week we had pointed out the market was trading right at the 78.6% Fibonacci retracement, going a long way, about 23 years ago. So this market you can see since March of 2020 has been under a lot of stress. This is the most significant bear market that the bonds have seen since the beginning of 2000s. And it has retraced about 78.6% retracement. So it's pretty significant. And here we were expecting for some strong support to come in. And what we have seen is that last week we had a bullish candle formation here. Now let's go back to the daily chart, and what we can see is that off the bottom around the low was 108.29. the market rallied as high as about 114. So that's that's a lot of ticks in this market. So that's about six points, which is quite a lot in a few days. And what we also see is that just from a symmetry perspective, the market rallied just a little bit, tad bit above than what it had rallied in the past, where it faced strong resistance and the market sold off every time it rallied by this much in magnitude. And this time it also was confronted with the 20-day moving average, and what we have seen is last Thursday market touched that and pulled back. Now the first indication for us will be if this market actually rallies higher than 115. That will be an indication that perhaps we have some sort of a good bottom formation taking place, and the market could in fact rally for a few days, no, excuse me, not for a few days, but a few months at least, from this bottom formation of the 78.6% Fibonacci retracement on the weekly charts. Let's take a look at the 10-year note market. So the 10-year market is in fact much bigger than the 30-year bond futures market. This is also something which impacts consumer credit a lot. So the credit card rates are worked off this much duration, and a few other loans as well. So it has a huge impact on the consumer credit side of things. And what we have seen is a rally as well of this 1.272 expansion, and the chances are that it's likely to continue to about 109. That's how much the previous rallies have been. And then the real one that we are looking at is around 110.11. That's the 38.2% Fibonacci retracement, and moving above here is gonna be actually good for this market. And finally, if it is able to move above 114, then the chances for a pretty good bottom in place increases tremendously. And the smart money seems to be actually weighing stocks versus bonds, and the bonds have had a tremendous bear market, and they look fairly cheap in terms of the value they can offer if the price begins to move higher and Federal Reserve decides to halt rates, or maybe in future decide to cut the rates a little bit. This market has a lot of potential to move higher. Okay, so now what we are going to do is we will go and take a look at the US stock indices. So this is the daily chart of S&P 500. Just to recap a little bit, this is the cash market S&P 500 index. This is not the ESE mini futures. We'll also take a look at that briefly though. And one of the things that we had been watching for in this market was the completion of this ABCD one-to-one price projection right at the 78.6% Fibonacci retracement of the lows of October 2022 and right into the end of July of 2023. When the market was forming this pattern, we had identified this one in advance, and our thinking was that if the market is really strong from a momentum perspective, we could see actually the price moving quickly higher, and in fact go and challenge and take these old highs out to form new highs. Alternatively, if the market finds resistance, we could see a good correction and the market begins to pull back. And in fact, this is what we have seen. So one of the key levels that we had been watching for has been around 4182 level. The market did come really close to it. We have this nice 200-day moving average right underneath that. We also have this trend line, and it was also very close to the 38.2% Fibonacci retracement, and also one-to-one price projection, which came a little bit higher, but it's possible that this move, the A, B, C, D, the C, D leg of it could be extending a little bit. I haven't drawn those yet, but maybe I might do that. As most of you will know, the geopolitical situation taking place in the Middle East, it's an unfortunate situation. But looking at the market's price action, it does seem that it has held quite well, relatively speaking. However, one of the key points that I want to bring to your attention is look. The market could so far only rally up to 38.2% Fibonacci retracement of the highs of late July 2023. Now, this is really important because if the market begins to get a significant amount of resistance from here, then this 4182 level getting hit, the chances will increase, in my opinion. It's also possible that it might just hit that on intraday basis, and if there is going to be a lot of support from this region, then we might see some sort of a reaction of this to the upside. We'll have to wait and see. However, on the flip side, if on a consecutive closing basis, the market is not able to respect this really key support level of 4182 on the cash S&P 500 index, then we'll begin to take a look at the market from a different angle, and perhaps begin to also take a look at some of the bearish scenarios, and how far the market can actually pull back. One of the reasons for that will be that, look, this is the BC swing, and this is the market symmetry concept that we like to follow on this channel, and this 4182 is right at this market symmetry as well. In addition, we have the trend line, we have the 200-day moving average with 38.2% Fibonacci retracement. So we have a confluence of a number of things coming here, and if that level is not respected, is broken to the downside, this is going to be an indication, a direct market feedback that perhaps things are not what we were anticipating those or forecasting those things to be, because that strong support that should have held in fact did not. So we'll have to begin to take a look at different scenarios. So for now, I'm just going to leave it. We'll keep on watching the price action and try to gauge further information left through the clues of price action. Now, this is the weekly chart of S&P 500. Again, you can see that nice trend line here, and these are the lows around 42.20. Price could perhaps move a little bit lower, challenge these lows, and that key important 4182 is really important as well. Now, from a momentum perspective, we can see that the 200 weekly moving average is nicely moving higher. However, the price is below the 20-week moving average. So yeah, it's in bit of in between a spot where we do have quite a few headwinds for this market. Let's take a look at the NQs. So this is the daily chart of the NASDAQ 100 E-mini futures. Again, here what we can see is that this market, if you look at the swings that we have, it is an indication this market is actually much stronger than the S&P 500 throughout this rally. And in fact, this market had been leading the equity indices, contrary to 2022 when this market was actually leading the indices lower. But this time around, after finding a bottom, pretty good bottom around the October 2022, so about 1 year ago, the market has rallied right to the 78.6% Fibonacci retracement of the all-time highs to the lows of October 2022. And we also have this number of pattern completions, which are highlighted in black ABCD and these brown ABCDs, also this orange line as well. And then we had similar red line here as well. So a number of things coming together, but the momentum of the market was pretty strong. In fact, it went higher, and this extended ABCD of highlighted in black. This is where the market in fact went and began to find resistance. So here what we are really looking for in this market is 14,350. That's a really important key level. Just below that we also have the around 14,050 to around 14,000 level. We also have the 38.2% Fibonacci retracement, and of course the 200-day moving average creeping higher, but this 14,350 is also a very important level because we have a number of things coming together. We have the one-to-one ABCD price projection right here. We have the 1.272 expansion here as well, and of course just below that the 38.2% Fibonacci retracement. So in that zone, should the market begin to move lower and test these lows, this is where we are expecting a good amount of support to come in for this market. Now, one of the other things which is in comparison to the S&P 500, this market, as we had mentioned, had been stronger. It went up to the 50% retracement of these highs back towards the July of 2023. So really key level is around 14,350 to 14,000, roughly speaking, that zone. Should the market not respect that zone as a good support level and keeps on moving lower, we will have to reassess the market in a different way. But for now, this is what we are looking at. So we'll take things one at a time, step by step, assess the price action, look at our pattern formations and support levels that we're looking at, and what the market feedback is, what the direct market feedback is, and we'll just reassess accordingly. Okay, so let's take a look at now the Russell 2000. So the Russell 2000, I think we should take a look at it on a weekly chart. Here what we can see is that just in a massive sideways market for quite a long time now, and so it's over 1 year. It's just been in this trading range. It finds supports like a double bottom formation, then forms a double top formation, and now it's coming back and challenging the lower end of the trading range one more time. Eventually it is going to break out in either direction. But one of the things about trading ranges is that one has to be really patient, and quite often our the trading ranges could last much longer than the patience of the trader or the investor. So that's in fact a fact. So here we are just watching that. Really nothing much to do in this index. If we just look at it on a daily chart basis, this is one possible support, and not it's just price keeps on moving lower and lower, and what we have going on is possible one-to-one price projection here. Here we go. Let me change that to 1. Yeah, it looks like it likes to go even lower, challenge these lows one more time. So one of the things is that this market had completed this really well, from a pattern perspective, a nice ABCD to the upside, and ever since that, it's just not been able to break out of this range, and just went and tried to challenge this one more time, just not able to do that. So nothing much to do, just not a good momentum in this market. So from a buyer's perspective, maybe even try to stay out of this market. So this is what we have been looking at in these key US stock indices. One more thing, we should take a look at the US dollar. Here we go. So maybe I might do a separate video on the US dollar and currency pairs. One of the key things that we were watching for was this 38.2% Fibonacci retracement, but the dollar is stronger. Dollar is much stronger, and it has gone higher than the 38.2% Fibonacci retracement, which was around 104.85. What it means is that this just the strength in the dollar could also put pressure on the stock indices as well. It's just that because of the events, maybe the investors are seeking safety into the greenback. And if we just take a look at the gold, so this is the gold. The look at the move in gold last Friday. That's a pretty massive move, 1880 to 1847. So that's like what, $50, like $80 move. Quite rare to see these kind of moves in the gold market, because quite a small market. But what we are looking at is that this move could in fact continue higher if we just draw the retracement of these lows. So what we can see is roughly about 50% it retraced, and there might be a price projection. There we go. It formed a very nice ABCD price projection. Let me actually draw it like this just to highlight, easier to see at times like this. Right at the 1-to-1 price projection, ABCD around 50%. Retracement very close to these lows, pretty good support there, and as long as the support is held, the gold market, just the ABCD on it could take it much higher. So let's draw this. Let me get rid of these expansions. Well, actually, let me keep the expansion here. Yep. So just if, as long as this low formed on the 6th of October remains intact, what we are in fact looking at is gold moving to about 200 and 2000 and 2240 to about 2293, so roughly about $2,300 per ounce. That's just what the pattern is telling us. And of course there are some resistance levels. So first one will be around 2150. In my opinion, this is a minor one. We could see some sort of a pullback from here. Then the 2241 to 2293 is the major target, in between, somewhere in between that. That's going to be short term. Longer term, as long as this low is held, we could even in fact see a much higher gold. This is how it looks like for the gold market. Apologies, the video is getting a little bit longer, but we covered quite a few markets. We also covered gold, we covered the US dollar, of course the bond markets using the futures, and the key US stock indices. So thank you very much for watching the video. If you like the video, please do click on the thumbs up button, and if you like the way we do our technical analysis using pattern recognition, Fibonacci retracements, price projections, and expansions and extensions, then please do subscribe to the channel. Thank you very much for watching. Good luck and good trading.